people have speculated that as we quote unquote go mainstream as an industry, the way that these markets are structured and the way that these markets play out is also going to change. No longer will we have 4 year long boom and bust cycles where the peaks are really high and the troughs are really low. There are some speculate about the nature of a super cycle where we never actually get a deep prolonged bear market, and instead we kind of just rebound over and over and over again and stair step our way up to the top. There's other speculations that we just have the same boom and bust cycles, but they're smaller and quicker, where we hit blow off top sooner. We do a bounce quicker, and then we just also keep on going. And how do you expect these market dynamics to change from what people are previously expecting, which are these 4 year long mega cycles, versus where do you think this is going now that we've kind of hit like this mainstream adoption? How do you see these markets changing?
So, I mean, generally, I have the pleasure of thinking on longer time scales, just because
Mm-hmm.
we run 10-year funds. So my perspective is basically like we're going to invest in these things, and I'll call you in a decade,
Mm-hmm.
let you know how we did. Fortunately, with a lot of this asset class, you can tell early. There is liquidity. You can understand how the markets are working if the technology is valuable. But I think over the longest time horizon, the math is just very clear and on our side. There's a generational preference for digital versus physical. Largely digital assets in and of themselves are a phenomenon that is, in the under 30 cohort, which will become the majority population cohort in the next 5 years. Those types of statistics just mean that, the financial gravity of these generations maturing is just on our side, and their preference will manifest in the prices of assets that they like going up. It's both because they like them, and it's also because, on a lot of them, they're fundamentally productive. And so while I still do see the case for boom and bust cycles for things that are more store value-esque, because they tend to trade around these kind of credit cycles, things that are productive, it just feels like there's really kind of no stopping the growth, because it's a lot of reflexivity. There's more TBL, there's more fees, the things are more productive, they're more useful, there's more capital to bootstrap projects in the ecosystem. Like, that will really never go away once that flywheel is spinning fast enough. And I think we've now kind of reached that escape velocity. Does that mean, there won't be 60 or 70% drawdowns? Like, I don't really know. I mean, there was one, 2 weeks ago. But I think the thing about drawdowns is, like, when you lose money and things aren't going exactly how you planned, you can kind of dig the hole as arbitrarily deep as you want it, kind of emotionally, or
Mm-hmm.
however you're kind of choosing to respond to the situation. But as long as you kind of have good assets and you understand the thesis and you're willing to wait long enough, there really is no cause for concern. And I think the amazing thing about this space, specifically DeFi, is that you're able to delay things like tax liabilities. You're able to borrow against your assets. Like, the actual functionality and utility is baked into this asset class, which doesn't put a lot of the same pressure on things like, traditional stocks or commodities, or even Bitcoin. So, when in doubt, zoom out is kind of, my personal
It,
mantra. And
it
I
is.
think good advice.
It is so funny. Like, once you cross the bridge from the legacy bank system to this new DeFi ecosystem, you don't tend to cross it back the other way, right? So, like, even if you sell your crypto native assets, what are you selling to? Like, stable coins, right? Like, what? Like, am I going to sell back to my Wells Fargo bucks and earn like 0.01% in a savings account? No, of course not. So it's to your point, it's staying in the DeFi economy and the crypto economy for the utility of things. But like